Hello and welcome. I'm Anisha Gupta and you're watching Commodity Champions. India is the second largest tea producer in the world and Assam is the single largest tea growing region. But the recent long dry spell since the month of November in Assam and West Bengal is likely to impact the production of premium first flush teas. We are also looking at the prices gaining in the previous year. The exports were up 18% as well. And whether or not we can keep on those numbers, to take that discussion ahead, I am now joined by Mr. Prabir Bhattacharjee. He is Secretary General at Tea Association of India. Mr. Bhattacharjee, hi, thank you so much for joining us. First of all, on the tea availability itself, and while we have seen that the winter rains have almost been negligible, we've also seen an early heat wave this time around. There's an impact or a concern about El Nino going forward as well. How are you reading the weather vagaries and their impact on the tea production?
Thank you very much, Manisha. I think, right at the beginning, you brought out the most, topical subject, in the fact that from November onwards, there has been hardly any rainfall. Now, when you don't have rainfall in the month of November, you don't have rainfall in the month of December, obviously the first flush of the tea gets affected. And kindly remember that the first flush of tea, which, extends till April of the year, produces around about 110 to 120 million kgs. Now, with the adverse, with no rain being received in the intervening period of November and December, there is a likelihood of 25% reduction in the crop concern. The only silver lining is there has been certain rain in parts of Assam recently. So let's see how it affects the crop. But definitely the crop will be reduced because of the non-receipt of the rain.
And are you when you say that the crop could be impacted? Nearly 25% of crop could be impacted.
Yes, if because of this non-receipt of the rainfall in the month of November and December, so that is going to affect the first flush.
Mr. Bhattacharjee, last year, if you can call it that, was a better year because we saw an average price increase of 7 rupees per kg. We also saw exports gain up by 18%. One, how are you reading those numbers on an year-on-year basis, and what are the expectations that you're putting out with this season, this year now?
Manisha, you see, so far as the exports are concerned, there's a very interesting fact, which I will have to bring it to light over there. You see, if you look at the exports that happened in the year 2021 compared to 2022, you'll find out in the year 2021, the total number of the CTC that was exported was 82.87 million kgs. Against that, in the year 2022, we have exported CTC 96.26 million kgs. Compared to that orthodox, there has been remarkable improvement. In the year 2021, we exported orthodox of 79.66 million kg, which has jumped to 98.27. Why I'm bringing this figure to you is to highlight that the importance of the orthodox in the export basket is increasing and it has surpassed CTC. That is the point that I just wanted to bring to the notice of the viewer.
Even with
and so far as the prices are concerned, as you know very well, in the domestic market, the prices of the orthodox, jumped almost 30%. So it became 271 rupees odd compared to 221 rupees vis-a-vis 2021.
Okay.
In the export market, where the prices of the orthodox was around about 14 or 15 rupees higher compared to 2020.
So would you say that the tea as an industry has seen better margins in the previous year? Would you also expect those kind of numbers to have a repeat performance in this year now?
See, so far as the orthodox is concerned, I think, this trend should continue. Okay. So far the orthodox party is concerned. I'll tell you the reason why. And I draw my, sustenance from certain figures. You'll find it out in the year 2019. We exported around about 54 million kgs of orthodox teas to Iran. Now, the Iran exports from India has diminished to almost 20 million kgs in the year 2022.
Okay.
Now, compare this to the increases that we have made in United Arab Republic. From 14.77 million kg, we have increased it to 37.98 million kg. Now, this shows that the orthodox trend is going to continue over there.
Okay.
So, so far the CTC part is concerned, we have a doubt, we have a little, apprehensions on that front, because you'll kindly note that, the tea that is exported or imported by Pakistan is the CTC variety from Kenya. Now, in the year 2022, the amount of tea that was imported by Pakistan from Kenya was less by 40 to 45 million kg. And when it is less than 40 to 45 million kgs of CBC, the Kenyan tea and the Indian tea industry are identical in the sense that they both produce CTC.
Okay.
So there's an apprehension on the front of the CTC, but on the front of the orthodox, it should hold good.
So if we say that the tea prices gained up by 3 to 5% in 2022, are you putting any estimates on what kind of a percentage increase we could see, even if a range for this year?
I'll be a little skeptical on the increase on the CTC prices,
Okay.
because of the reason that I just mentioned about the pressure that the availability of the CTC tea is more in the international market.
All right.
Just because the Pakistan is importing less of the CTC tea, so obviously there is more of CTC tea available in the international market.
Okay.
So what will be the impact on the CTC prices needs to be seen over there. But on the orthodox, one should be reasonably confident that the prices should hold.
All right. I also want to talk about the very definite clarity now that you are looking at small tea producers' numbers continuing to increase and capturing nearly 52 to 54% of market vis-a-vis the larger real estates. Are you looking at these numbers, widening further?
Manisha, I think the trend would show you in the last couple of years, the percentage, that is being held by the STG is gradually increasing. So there should not be anything contrary to that.
Okay.
This is going to increase in the coming years. So therefore, now what is 52, 52, 53% should be increasing, and we anticipate that. That's very much on the horizon.
What also is your sense on the per capita consumption that we are looking at for the Indian markets right now? I mean, we do understand that it is much lower. 800 grams per capita is what I read the last time. Where do we stand right now? Yeah.
Panisha, you're very correct. This is an area where even the tea board is putting a lot of emphasis on. They're commissioning methods in which it can be improved and all that. But this is not significantly improved over the years. So it remains 800 plus minus some 10, 20 grams over here. And the internal consumption, unless that increases, please mind it, there was a time when the internal growth or consumption was told to be 3%, which is now touted to be 1.7%, 1.6%. So that is an area of definitely concern, for the internal domestic consumption.
How are you looking at the exports number? I mean, as you said, there are new markets coming in. There are some concerns perhaps from Middle East as well. But with 18% of a base that we've created in the previous year, what is it that you see now for this year?
Manisha, you see, so where the exports are concerned, you will know that in the year 2022, the exports have done much better compared to 2021. In fact, till November figures, that has been released by Tea Board, from January to November, the exports figures show 207 million kgs, which was 176 million kgs in the previous year, that is 2021. So I personally believe, that the export should hold out, in the coming year also.
All right. So expectation of stronger exports. Prices may increase for orthodox, not so much for CTC. And as far as the Indian growth consumption is expected, as Mr. Bhattacharjee told us, 1.6%, clearly dismal, but that's exactly what he's expecting for this year as well. Mr. Bhattacharjee, as always, thank you so much for joining us and giving us a 360 degrees perspective on the tea industry in India there. But with that, it's time for a short break. But coming up, we shift focus to commodity prices and the fall in the month of Feb amidst an erratic Chinese recovery. And the other side, stay tuned. Welcome back. You're watching Commodity Champions, and the commodity prices have come off its 2023 highs, posting a negative February as the US dollar index rebounds to a 7-week highs. The markets are factoring in a 50 basis point rate hike in the next meeting. Also, the uneven and erratic China recovery, the commodity powerhouse, seems to be weighing on commodity prices. That's one. And the other big one that the street is watching is the Black Sea Grain Initiative, brokered by the United Nations and Turkey in last July, allowing grains to be exported from 3 Ukrainian ports. The agreement was extended in November and will expire now on 18th of March unless there is an extension that is agreed upon. To take this discussion ahead, I am now joined by Carlos Mera. He's head of commodity research at Rabobank. Carlos, hi, thank you so much for joining us. I want to start with the Ukraine concerns first. And while the last year has been positive, we've seen those numbers, but that deal expires on 18th of March. We do hear that there are conversations going on right now. How are you reading, one, on the export numbers itself, the kind of production that Ukraine is looking at, and the availability overall in the international markets?
Yes, you said the deal is going to expire in about 3 weeks. So there's a lot of attention being focused on that deal and a potential extension. Last time it was extended, it was very close to that timeline. So we also expect the same to happen at this time. We expect any announcement to be made very, very close to the deadline. Um, However, the grain deal is very good. It's very good for Ukrainian farmers. It's very good for Ukrainian agriculture generally. Uh, but the low-hanging fruit of that deal, which it was exporting existing stocks in and around Odessa, and the crops that are accessible from that area, that has already sailed. So going forward, we will expect to see a little bit lower exports, even if the deal is extended. And of course, there have been delays in the inspections as well. And looking a little bit further ahead, we're looking at a decline in Ukrainian agriculture. So for example, when we look at winter wheat plantings, they are 30% lower year on year. Of course, the plantings before that were exported last season, they were planted before the war. So from that level, we got at least a 30% decline. So in any case, the deal is great to have it there for as long as possible, but we should expect to see lower exports going forward.
Carlos, would you say that the markets have factored that in as well? And as of now, there is sufficient supplies, because when you look at the global wheat prices, we're trading at a 17-month lows. We've seen corn and edible oil prices come off from its highs as well.
Yeah, well, a couple of reasons there. You mentioned the strength of the US dollar. That's clearly in the market. I think most of the market already expect that deal to be extended. There's a lot of international pressure for Russia to maintain and respect the grain corridor out of Ukraine. And also, we might be looking at better weather ahead. I mean, we're coming from 3 consecutive La Niñas events globally. That's very detrimental for grains and oilseed crops on a net basis globally. And that this La Niña event is weakening and it's expected to go away, maybe within the month or within the next 2 months. But with La Niña away, there's an opportunity for crops to recover and potentially will be moving to global surpluses of a number of crops. We expect, for example, in Brazil, to see a much bigger soybean crop, a bigger corn crop, bigger sugar cane, and bigger coffee crop in the coming season.
All right. Since you mentioned coffee and sugar and cocoa, these are a few of commodities which actually have continued to trade on a higher side for the month of Feb in the positive as well. How are you looking at sugar, where a recent International Sugar Organization report suggests that the surplus may not be as much as the agency was earlier forecasting? And we've seen coffee and cocoa prices continue to be on a firm rooting as well.
Yeah, well, different fundamentals for all of them to a great extent. In terms of sugar, of course, we have India maybe producing a little bit less than expected. There was a recent downgrade to the expected volumes of the current crop by ISMA. That's already in the market and is affecting the front end of the curve, which is trading at a very strong premium. Now, when we look further ahead, as I said, that expected increase in Brazilian output will come in, and that will lower prices ahead, and that's already in the forward curve. I think we might see lower prices in the future, but for the time being, we have quite a bit of a deficit in the front. And when it comes to coffee,
well, yes, I was going to ask you about coffee, where we have seen support, and cocoa as well, because I remember, Carlos, most reports suggesting that Europe, which is the largest consumer of cocoa, isn't doing so great. So we might be looking at lower consumption, but that also has not played, and we've seen coffee and cocoa both trade firm.
Yeah, different fundamentals there. On the coffee side, we still see very strong differentials out of a number of countries. Coffee has had a rally already. Right, for the last month or so, we saw prices strengthening quite a lot, from $145 per pound to currently 180, almost 190 at the front. So with that background, that physical market is very bullish. But also, I have to say, I think most of the rally is there, and from this place, we might even see a little bit of a reversal. The peak of the rally was during Carnival in Brazil, so there wasn't enough coffee to be sold against the rally. Now, this week, Brazil is back to work, so we might see a little bit more sales. That might quiet the market a little bit. But all in all, I think coffee is relatively well priced. When it comes to cocoa, it's a little bit of an enigma. On the one hand side, demand, we're not expected to be doing that great. Maybe demand expectations were very low in Q4, especially because Europe is the largest producer. EU consumer confidence was rock bottom in November, December, because of the energy crisis, the war, etc. Now there might be a little bit of a recovery, but also we hear that the situation in West Africa is not that great. The supply side is not looking great out of West Africa.
Clearly that. So would you, when you look at the overall agri as a space, Carlos, when you look at the month of March as well, given the kind of fundamentals that you just spelled out, if you were to pick a couple of strong trades, long or short, which one would those be?
Well, when it comes, for example, to wheat, I think we might see short-term weakness because, as I said, extension of the Ukraine grain deal, plus very strong Russian exports. So we may see that weakness in the next couple of weeks, 3-4 weeks. But then going forward, like 6 months forward, looking at Russian next crop, we're going to see a big drop. So we believe wheat might be well supported. And I think the wheat-corn ratio will increase from that level. So I will be bullish that wheat-corn spread.
Okay. I also want to talk about China because that is a powerhouse of commodities, and the January as a month saw a lot of pent-up demand coming into China. The estimates were raised after the zero COVID policy was eased off. But Feb clearly has weighed on many of these commodities. So money managers, hedge funds, which had started picking up various commodities, including soft commodities also, seem to be taking profit out right now. How are you looking at Chinese consumption going forward?
Well, I think clearly China has been reopening from numerous stories about demand of many goods has been doing very good. So certainly in terms of veg oil, I will probably be a little bit optimistic because of the reopening. China is not a huge importer of soft commodities, but of course it's a huge importer of soybeans. However, the story there, and corn to a lower extent, however, the story there is that China has been scaling up the production of hogs. So production of hogs now is much more industrialized in China. Therefore, the feed demands is less. They don't, they have very good genetics, they have very good treatment. So we don't expect an explosive import program of soybeans nor corn.
All right. One final question and we'll wind down this conversation, Carlos. This one is on what is your sense? I mean, we spoke about the dollar index and that's holding firm at around 104 or 105. And then the markets also are factoring in a 50 basis point rate hike. If that was to happen, what percentage move would you then expect in case of commodities, or do you think that has been factored in already?
I think that has probably been factored already, to be honest. We do expect, as Rauban, we do expect to see dollar strength throughout the year. So that might create a little bit of weakness, but at the moment, the next hikes, I think they are already priced in.
And how much of dollar strength then are you expecting? Are you looking at levels beyond 110 yet again?
Probably not that level, but you have to ask all macroeconomists. But certainly a little bit stronger than now.
Okay, so the strength in US dollar is something that we'll have to live with, and that would perhaps keep many of these commodity prices in check. Carlos, as always, thank you so much for joining us and talking with us with the whole host of all of those commodities. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.